Welcome back to another video. So many of you have requested a video about the development of the P2P lending space in the future. Some of you have been wondering whether the current interest rate of 11% is too good to be true and what's going to be the impact of the upcoming regulation for P2P marketplaces and crowdfunding platforms. So in this video, we will dive deeper into the possible scenarios, and I will also give you my prediction for the P2P lending space for the upcoming 5 to 10 years. My name is Jakub from P2P Empire, and if you are new to this channel and your goal is to become a more educated P2P investor, consider subscribing and also hit the like button if you want to see more content like this in the future. So in order to predict the future, we will need to analyze the past and look at the current trends in the industry. So today I'll be talking about the history of the P2P lending and the current developments and what it means for the future of the P2P lending space. So let's start by looking at the origins of P2P lending. Some of the oldest P2P lending platforms are the US-based LendingClub and Prosper, as well as Zopa from the UK. All of the platforms were founded around 2005, and only investors from certain US states or the UK could have invested on those P2P lending sites. LendingClub as well as Prosper are regulated by the SEC, which stands for the Security and Exchange Commission in the US. Zopa is regulated by the FAC, which is the financial regulator in the UK. It's very important to mention that all of those platforms offered consumer loans, and you as an investor could invest in notes, which are securities rather than claim against the borrowers. This was the case for LendingClub and Prosper. You should know that investing in notes does not give you the same rights as if you invest directly in loans. If the P2P lending platform would go bust, you are likely to lose money even if the borrower would continue their repayment. Zopa is the only platform where you still get a loan contract with the borrower. If you look at the changes in the business model, LendingClub actually stopped their peer-to-peer lending service last year as they got acquired by a bank. They are currently offering investments only to institutional investors and not to retail anymore. Prosper is still offering P2P lending services to investors. However, the annual yield is somewhere between 3.7% and 9.8%. You should also note that those loans are unsecured and you need to deduct losses and additional fees. Prosper is charging a 1% service fee to all investors. There are also no buyback guarantees with those P2P lending platforms, as you might be familiar with other P2P lending sites in the Baltics. Zopa has also slightly adapted the business model as they got their banking license. The company expanded its offerings with an ISA account, which is a savings account for which you don't have to pay tax. In the US, Prosper is offering an IRA account that has similar features. It's worth noting that those savings options are not backed by any protection scheme, and the expected yield is between 3 to 4% per year. This return will further decrease as you deduct the average inflation rate. Bondora is also one of the oldest P2P lending platforms in Europe. The platform is mainly lending money in Estonia. However, it has also some originations in Spain and Finland. Looking up statistical data on Bondora is quite tricky. Most of the time their statistics don't load. You can, however, download the loan book to get an idea about the performance of their loans. Bondora is known for its Go and Grow product, which is the easiest and most liquid P2P lending product on the market at the moment. Some investors like to think that it is safe to invest in Bondora's Go and Grow. This is a big misconception in my opinion, and you should have a look at the performance of the loans as well as on their recovery rates before you start investing. That's actually valid for any P2P platform. Bondora has a lending license from Estonia, but there are no protection schemes that would cover your investments should Bondora not be able to recover the loans. So this was a short history lesson. It is a great reminder to see how platforms have developed in other markets where P2P lending is regulated. 2 out of 4 platforms got a banking license and 1 moved away from peer-to-peer lending. What is certainly interesting are the savings account options for which you don't need to pay income tax or tax from capital gains. That's definitely something we don't benefit from on Baltic platforms. So now that you are aware of the development of some of the oldest platforms, let's review some of the more recent events. In 2015, Mintos launched its P2P marketplace. The idea was to launch a marketplace where retail investors could fund loans from lending companies whose owners are to some extent shareholders of Mintos. At some point, Mintos had over 70 lending companies from more than 30 countries. Unfortunately, many lenders got suspended at the beginning of 2020, and currently Mintos is trying to recover investors' money. Last year, we also witnessed many scams by platforms like Investio, Croupier, and Kuzo, just to name a few. On a positive note, In the last couple of years, we also started seeing some crowdfunding platforms that offer secured loans backed by tangible assets. The growing number of platforms, as well as the recent P2P lending scams, put some pressure on the regulators, and several platforms started the process to become a regulated company. In spring 2020, Mintos, Debitum, Baia Invest, Peerberry, and Vyventure applied for investment brokerage firm license in Latvia. The licensing process takes much longer than many of the platforms anticipated. Some platforms expected it to get the license in Q1 this year. Judging by the pace of the process, Q2 or Q3 is a more realistic timeframe. It's also questionable whether all of the applicants will receive the license. The licensing process includes several requirements and stages. The regulator conducts an audit of internal processes. Also, the AML requirements for the platform and its management, owners, as well as the lending companies are being checked. The platforms are required to send a monthly report to the regulator, hire an AML officer, and increase the minimum equity to €125,000. Platforms are also undergoing changes in the business model, which have been already teased by Mintos with their issuance of notes. So by reviewing the past events, you can tell that the P2P lending industry has been developing significantly. A very interesting change has been the regulation and the tax treatment of certain P2P lending products, especially in the US and the UK. That's something the Baltic platforms are liking so far. A tax-free investment account for investors from the European Union would make this asset class certainly very attractive for long-term investors. So based on the past events and the current trends, here's my personal prediction for the upcoming 5 to 10 years. I believe that after 2021, there would be very little reason to invest on an unregulated platform that offers investments in unsecured loans. The risk-adjusted return won't simply be worth it if regulated platforms keep their interest at around 10%. From an investor's point of view, there won't be a reason to earn 12% on an unregulated platform if you can get 11% on a regulated one. More opportunistic investors will likely experiment with unregulated platforms, but the result of this won't be worth it in the long run. Smaller, unregulated P2P lending platforms that list mainly payday loans will definitely lose investors, and I don't expect many lenders launching their own platforms as the cost of acquiring investors will be much higher. Many experienced investors will also increase their portfolios on platforms that offer loans that are backed by real estate, cars, or heavy machinery. We will also start seeing more institutional investors joining the P2P lending space, which will drive the demand for investments much higher on certain platforms, let's say. I do not expect a drastic drop in interest rates as long as there will be competition on the market. The P2P lending platforms are aware that the offered yield plays quite a big role for P2P investors. What many P2P investors, however, don't realize is that the risk and ratio, which is often not considered. In order to keep the interest high, lending companies will need to expand into more developing countries in Asia, Africa, and possibly also tapping into the South American markets. That's particularly valid for lenders in the payday loan business, as the more mature markets will start getting more strict with rules and requirements, which will lower the margins. Real estate lenders and other companies that offer secured loans will need to expand to Eastern European markets to remain competitive. The entry barrier for newly launched platforms will also become much harder, and the chance of investing in scams will decrease. That's, however, not the case in the crypto lending space. Be prepared to see more scams in this niche market. There will be certainly some winners, but there will be also more scams in this niche, so people will likely lose some money. What I would personally like to see is a tax reform for P2P investors, streamlining the regulation on a EU level and offering tax benefits for income from P2P loans would certainly attract more investors. Introducing a tax reduction for long-term investment portfolios is extremely important to make P2P lending an attractive long-term investment. So that's been my prediction for the upcoming years. I have also included some findings from my recent P2P talks that we keep having with the CEOs and founders of various P2P lending platforms. But now, let me know what you think. What kind of development do you expect for the upcoming years? Let me know your thoughts in the comments below. And that's been it from me today. Thanks for watching, and I will catch you in the next one.